It took 50 years, but eventually, after it cost corporations hundreds of billions of dollars, they finally came to their senses. Now the pendulum is swinging toward a revolution. What you're about to hear could change the fortunes of some investors, including you. It's a global phenomenon. Trillions of dollars are moving. According to Forbes, the world committed a record $501.3 billion to this trend in 2020 alone. The dollar amounts are staggering, and industries all over the world are reacting already. As investors, we can take advantage of it too, but it's not easy. You won't hear about this on Fox Business or CNBC, and it rarely gets mentioned on Bloomberg News or in the Wall Street Journal. But it's a movement that will change the way we invest and the way our investments work for us, and it's just starting now. It will create generational wealth for some investors, and you can be part of it. Let me tell you what happened. The Economist magazine called it the biggest idea in business. In the 1970s, the business world embraced a controversial theory. It was economist Milton Friedman's theory that a business only existed to make money for its shareholders. Friedman published an iconic and influential essay in the New York Times on September 13, 1970. In it, he declared businesses to be free of any social responsibilities. He thought that a business's only goal was to maximize profit for its shareholders, and any other obligations for a corporation was pure socialism. Don't get me wrong, shareholder value is important, but making it the highest goal of a company is absurd. Companies create shareholder value through the quality of their business. That's not the same as putting company growth ahead of everything else. And the last 50 years are littered with the stories of companies that blew up by focusing solely on growth. The law of unintended consequences proved Milton Friedman wrong again and again, sometimes tragically, as we'll see. As far back as 1970, experts were pushing back on Friedman's wrong-headed views. At the time, Harvard professor of business Joseph L. Bauer called it the error in the heart of corporate leadership. Even former General Electric CEO Jack Welch became a critic. In 2009, he called it the dumbest idea in the world. It took half a century of evidence to expose the weaknesses in Friedman's theory, but the results brought many important people over to Welch's view. CEOs like Brian Moynihan of Bank of America and Chuck Robbins of Cisco Systems lead the new trend today. It's shifting the priorities of major public companies and institutions all over the world, and the volume of money moving into these investments is staggering. It will make some investors rich and leave the rest behind. Financial juggernauts like giant asset manager BlackRock, megabank JP Morgan Chase, and the massive CalPERS retirement fund are all pouring trillions of dollars into these new ideas as fast as they can. Bank of America pledged to finance $1 trillion worth of this new wave by 2030. It's the start of a bull market in a brand new class of stocks, and we can get in early. And that's the secret to creating wealth in the stock market. Find the big trend and get in early. It took 50 years for business leaders to see the flaws in Milton Friedman's theory. However, we can see how the negative results over the last half-century set the stage for the massive change in direction today. Let's take a quick look at a few of them. It was this idea of maximizing profits at any cost which led to one of the largest crimes of our society today. It's not murder, arson, money laundering, or drug smuggling. I'm talking about the incredible shrinking chocolate bar. You know what I mean. That chocolate bar we bought back in the 1980s is a lot smaller today, even though it costs more. There's a term for it: shrinkflation. That's when a company shrinks its product to reduce cost but keeps the price the same to consumers. It's a hidden form of inflation that makes the company more money and we pay the price. Thanks to good old Uncle Milton, we pay a lot more for a whole list of common items. The companies shrunk the packages gradually to fool us. But this theory didn't just empower companies to shave off a few ounces from a chocolate bar. It also led to massive fraud. For example, Volkswagen faked emissions data to make its cars more attractive. The company cheated on emissions tests after promoting clean diesel for years. Sadly, that kind of fraud is a more benign end result of the application of Milton Friedman's theory. When industrial giants cut costs, it led to some of the ugliest human disasters in history, all in the name of profit margin. The biggest recent example happened on April 20th, 2010. That's when a blowout on British Petroleum's Deepwater Horizon drill ship caused it to explode. It killed 11 workers and created the largest oil spill in history. It's the highest profile disaster that we can lay directly at Uncle Milton's feet. In 2014, regulators cited both BP and Transocean, the operator of the rig, for their lack of safety. BP failed to perform regular safety inspections. They didn't test the emergency systems directly responsible for stopping blowouts. And inspectors found that the safety system wasn't wired correctly and the batteries were dead. Most of the blame goes to BP. The company embraced a culture of cost-cutting on safety that ultimately cost BP and its shareholders $65.8 billion. Sadly, this corner cutting isn't a new phenomenon. This kind of short-term benefit, long-term failure is well documented in human history. There's even a proverb from Germany in the 1200s for one of a nail. It says, "The wise tell us how a nail keeps a shoe a horse a man a castle." It means that if we save time now by not checking the nails in our horseshoe, it can cost us the kingdom in the long run. And while we don't need horseshoe nails so much today, the same concept applies to industrial safety. For one of an inspection, a $350 million drill ship was lost. For one of a drill ship, $65.8 billion of BP cash was lost. The same cascade of errors that lost wars in the 1200s caused a litany of industrial accidents over the past 50 years, and BP was particularly bad. The amount of capital lost in disasters helped shape the movement towards sustainability that took hold in the last few years, because the cost in both capital and human health came to light. According to a 2018 study by Liberty Mutual Insurance, employers across the country paid an estimated $1 billion per week in compensation for workplace injuries. In 2019 alone, the total cost of workplace injuries was $171 billion. The economics are clear. Companies can't put profitability first and ignore the downstream cost of the consequences of that behavior. Honestly, it's shocking that his premise held on this long. His idea that the owners of the business were more important than the customers and employees grew for 50 years, until now. Now we understand where management for profit only has a hidden cost. Companies that account for risk find an economic incentive to do the right thing. 50 years of Uncle Milton's folly got us to where we are now, but business leaders recognize the flaws in that system, and more importantly, shareholders understand the need to change to a more sustainable system. The lessons from BP and many other disasters didn't go unnoticed. The heads of some of the largest corporations in the world took note. They finally recognized what Bauer saw all along, that the sole goal of maximizing shareholder value was pernicious nonsense. As he said in the Harvard Business Review, the idea is flawed in its assumptions, confused as a matter of law, and damaging in practice. Today, every giant investment bank around the world talks about sustainability. After 50 years of following a profit-first mentality, public companies face a wall of pressure to change, and this shift is massive. In August 2019, a Business Roundtable gathered 181 CEOs to redefine the purpose of a corporation. Jamie Dimon, chairman and CEO of giant investment bank JP Morgan Chase, said, "Major employers are investing in their workers and communities because they know it's the only way to be successful over the long term. These modernized principles reflect the business community's unwavering commitment to continue to push for an economy that serves all Americans." This is a tectonic shift in both investor sentiment and in corporate leadership. The tide has turned. There's a flood of money into sustainable companies. It's a huge boost for everyday investors like us, because the rising tide of institutional money will increase the value of sustainable companies. Their shares are going to be in demand. We have a massive opportunity right now. We can buy companies that embrace sustainability today and ride that wave higher as more institutions come around. The players are too prominent. The dollar amounts are too large to ignore. This move to sustainability will change the way we invest. It'll change the future of many companies and by default, change the fortunes of many, many investors too. Over $51 billion of investors' money moved into sustainable-focused companies in 2020. Today, 1/3 of all the money under management in the U.S. is flowing into these companies. From 2018 to 2020, assets invested in these companies grew from $12 trillion to more than $17 trillion. That's a huge amount of money, and it will send shares of these companies soaring higher. The good news is we have plenty of time to position ourselves before the big move, because as we discussed before, potentially trillions of dollars are going to move into sustainable companies. We just have to get there first, and we'll see our wealth grow. There is a way to get good, solid, sustainable investment ideas right now. These aren't day trades or complicated option strategies, and they don't need an expensive stockbroker to trade them either. These are well-researched stock recommendations that you can buy in your Fidelity or Robinhood account. Normally, this kind of research isn't available to your average retail investor. Institutional, in-depth research reports like these cost thousands of dollars to access, and it's usually sold to hedge funds, big investors, or private family offices because it has enormous value. But that's about to change. Now you can get access to this kind of research too. You see, there's a team of experienced investment analysts who are sick and tired of the way the system worked for the last 50 years. They think you should have the same investment opportunities as the big money folks. And they don't just find profitable companies that can help us grow our money. They add another layer to that. They find companies that can be great investments and check the box on sustainability too. These are investments that can make us money and also make us feel good about owning them. They call it for the good investing. That's their catch-all term for sustainability, ESG, green investing. This is an experienced team of financial researchers, and they bring decades of experience with them, as well as a genuine desire to see sustainable investing flourish. It's called Mangrove Investor, and it's designed for people who aren't necessarily experienced investors. Their goal is simple: make sustainable investing easy, interesting, and profitable. They research every single company they recommend, both financially and beneficially. They dig up information about how the company operates, what good it does, and how its stock could go up or down. Here's what you need to know about Mangrove Investor. All the research is original, it's completely independent, the recommended companies do not pay for coverage, and the experts work solely for you, the subscriber. If you don't renew your subscription, they don't make any money. Mangrove Investor is the alternative to the superficial, low-quality financial advice all over social media today. The founders wanted a better, smarter way to find great investing ideas. And the professionals at Mangrove Investor don't approach investing like it's a poker game. Like you, they worked too hard for their savings to consider gambling with it. At Mangrove Investor, they do everything they can to reduce risk and maximize returns. They focus on reducing risk because it takes a long time to make up a big loss. And they see a huge opportunity for investors today. There are hundreds, if not thousands of companies shifting to the for the good idea right now. Some of the world's largest companies understand how important it is for them to give back to the communities that support them. And Mangrove Investors experts know that owning these stocks right now is the key to making big gains over the next 3, 5, even 10 years. You never fight the trend. You jump on board and ride the wave. In this case, we can do so knowing that our investments are doing good for our community and making money for us too. Mangrove Investor's core group of analysts, writers, and researchers are all financial industry veterans. They have decades of experience researching and writing about investment ideas, and they believe that doing well includes helping others do well too. Mangrove Investor helps individuals find the right investments for them. They know the difficulties people have in figuring out what to buy and when to buy it because they've been there too. Over the years, the Mangrove team helped tens of thousands of individuals with stock research. Now they're turning their attention to this new and exciting investment trend, sustainability. It's an idea that resonates with many of us, the idea that we can own companies that are improving our communities and grow our wealth. That's the best possible outcome. This is the time to get into the stock market. This is the time to learn from the best team in the business. And this is the time to embrace a change to sustainable businesses. It's an important change for the good, and it means we can do well financially and do good with our investment dollars. If this sounds like something you want to do too, you need to take a risk-free trial of Mangrove Investor's Impact Investor Spotlight today. And to make that easier for you, we'll give you a free research report called How to Capitalize on the Sustainability Movement, worth over $500, completely free just for trying out the service. That report details the investing implications of a fully electric world. In it, you'll get the details of how our transition from fossil fuel to electric vehicles will create a boom in specific sectors. And we found several for the good companies that will absolutely soar as we move in that direction. In it, we feature a special company that revolutionized our ability to reuse steel, and they have a partnership with a giant Spanish company to do the same with copper. We'll give you that investment idea along with several others completely for free when you sign up to try the Mangrove Investor service. We're convinced that once you read our work, you'll want to become part of the Mangrove Investor community. Here's what you get when you take a risk-free trial of Mangrove Investor's Impact Investor Spotlight. When you join today, you'll receive access to Mangrove Investor's Impact Investor Spotlight model portfolio, where you'll find every position we recommend. We'll recommend at least 12 investments a year. And you'll also get weekly updates, so you'll never be left wondering what to do. Every Thursday, we'll update you on our current position and what's happening in the markets, and our detailed Impact Investor Spotlight monthly reports. Each month, we'll present our latest sustainable investment opportunity in a simple, easy-to-understand format. Each recommendation will include a breakdown of the company's financial history, its expected performance, and where it fits in the new sustainable investment portfolio. And you get 24/7 access to the Impact Investor Spotlight's members-only website. We keep all the latest information securely stored right there. As a member, you'll gain uninterrupted access to this encrypted website anytime, anywhere. You'll also get unlimited access to The Grove. That's our website dedicated to our community. It covers sustainability in private companies as well as public. And we highlight our community service there through our nonprofit activities. Mangrove Investor donates a portion of every sale to support our chosen nonprofits. To help you maximize your investment dollars, we've kept the price of Impact Investor Spotlight at the lowest level possible. A one-year membership is just $199. But we don't want anything to hold you back from trying our service today. So the first 1,000 viewers who respond right now will get our introductory price of just $99 for a one-year membership. That's an instant savings of $100. And we're giving you a free look behind the curtain to make sure Mangrove Investor is right for you. Take 1 month to review everything. If your membership doesn't live up to your absolute highest expectations, you'll get every single penny of your subscription fee back, and you have 4 weeks to decide. It's that easy. That's how confident we are that this sustainability trend is a winner. It's a do well by doing good moment. We're tipping the scales and benefits in your favor if you join today. You get our special report, How to Capitalize on the Sustainability Movement, worth over $500, completely free just for trying out the service. We believe joining Impact Investor Spotlight right now will be one of the best financial moves you'll make. To get started, the secure order form is below. We hope you'll love being part of the Mangrove Investor community. Thanks for listening.